Hello and welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for November 14th, 2009. Our website is blog.accendotraders.com, where we put together video technical analysis trading plans on a daily basis. We are a firm believer in trading plans. We want to make sure that we're prepared to trade for each trading session. We want to be focused and disciplined. And by having a trading plan, we are able to remove our emotions and just focus on the day. But most importantly, because we're disciplined, it cuts down our time and we can spend time with our family. The week that was, well, obviously the market moved up this week rather nicely, and we're up nice for the year. Especially if you would anybody that caught the March lows, you're really up for the year. But the question is, where do we go from here? And that's why I say, can you hear me now? Those of us who've been watching our daily videos each night, make sure you come to the website or subscribe to our podcast and get our daily videos. You know, the question becomes, what's going to be our catalyst? What's going to move the market? Yes, the market has moved up, but we moved up on lighter volume. So the conviction may not be there. And so right now, the market is looking for a catalyst. So what we've seen so far in November is the market taking back much of the end of the month decline from October, which is great. So hopefully we can make a new swing high across the board, not just on the Dow and S&P, but we need a NASDAQ to break out also, and we'll talk about that when we look at the charts. But with that being said, the Dow Jones really has taken leadership. Now remember, there's only 30 stocks in the Dow Jones, so although they're taking leadership, it's not the whole market. That's why the S&P is a better gauge of what's going on. And it's moving up too, but not as nicely as the Dow. So the biggest catalyst for the month of November has been the dollar. With earnings season coming to an end, as you can see, it was very thin. Economic data was very thin last week. The market has to find something else to move. I can remember, I've shared this before, that a couple years ago it was the price of oil. As the price of oil went up, the market went down. The price of oil went down, the market went up. An inverse relationship. But now the dollar is our inverse relationship. And at the beginning of the week, we had some data coming out of the G20 meeting that, you know, basically there's no immediate signs of trying to end the recovery stimulus packages around the world. And so the dollar tanked and the market rallied. We also see gold hitting new highs as people are running for safety from the dollar. So this week coming up, what do we have that can move the market? Still, you know, we have some things that have possibilities. Retail sales, the state of the consumer is certainly important. Housing starts, again, consumer, are we buying, is important. Initial claims did not have the bang that it had last week. Another thing that's important about this week is that although earnings were thin, we did have some companies report good earnings like Walmart and Hewlett-Packard and raise guidance, and the market didn't rally. So the question is, are we now going to start selling news? Or where before we were buying all news, good or bad. Now it seems like we're pausing or we're selling good news. So for Monday, again, we have retail sales. That's certainly interesting. We have a lot of retail companies that have earnings this week: Lowe's, Target, Saks, just a whole bunch of them. And also you can see Sears is this week. But again, you can see we're very light on our earnings for as far as market moving potential. So here we are looking at the charts, and you know, again, initially when you look at it, you can say, "Wow, look at these beautiful swing highs and newer highs, and the great support of the 50 moving average, testing it and bouncing, testing and bouncing. Looks great." But the only thing that again that is concerning to me is as we bounce off the 50 moving average at the beginning of November, what has happened? We really have had no volume this month. Really haven't. We had a little spark there, but for the most part, below average volume. Nothing is above average. So that certainly is concerning, but we have made a new swing high. And look at the bounce here off the 5 moving average here on Friday. So, hey, as long as we keep doing that, you know, usually once we start getting a red candle, what happens? We do form some type of retracement back down to, you know, the 20 moving average, 50 moving average. So I would still wonder if this is, again, not our next pullback to test a new high, but again, that comes down to what's going to be our catalyst. Do we have a catalyst that can move the market higher? Let's go ahead and look at the On the NASDAQ, we've basically been talking about this channel that the market appears to be in. We got a little bit going on here around 2200, 2180. Here's our top. And then down here at around 2025, you can see the bottom. So what we really want to do is play the breakout. Are we going to break below here, or are we going to break out? As we get here closer to the top of this again, this could be the beginning of a pullback. With no conviction, that certainly can happen. The dollar can only go down so much, and so we do have to rally a little bit. Let's look at the S&P 500. Now the S&P was moving right along with the Dow, bouncing new high, bouncing new high. But what happened? Again, not the distinguishable new high like the Dow. We stayed in range at this 1100 level. So right up here, we stayed in range here, and now we got a bottom around 1025. So we really got almost a 100-point range that we could be playing. So what do? You want to play the breakouts, and you want to play the channeling. Let's switch over to a monthly chart just to see where we are there at our long-term resistance. And here we are on the NASDAQ, and you can see what we were hoping for was a run up here to the 50, but again, it does seem like we're kind of going the same. Again, look at the volume, not really that impressive. Going over to the NASDAQ, we are still sitting above the 50. Again, the NASDAQ led us all the way up. The NASDAQ led us up, and again, as we start to consolidate here, one reason may be because the NASDAQ is not participating. It's just the Dow is moving us up. And finally, the Dow on the monthly chart does look like it's go ahead and it's reaching the 50 moving average. And that's going to be long-term resistance also. But also look at this. And as we kind of look at the bottoms here in 2006, and notice that this is a range of resistance. The wick touched it here, the wick touched it here. The 50 moving average, we're all in this range that certainly could be strong resistance. Switching over to internals, again, I just want to point out the volume issue, which is my concern. And really starting at the beginning of November, what do we see? Red numbers mean the volume is lighter than the day before. So even though we see 90s, it means the volume was lighter than the day before. So lighter, 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 lighter volume all the first week. This week, good Monday, although not above average overall, and then lighter, 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 lighter. So volume's going down, and typically we all know that a move on lighter volume is a counter trend move. Prepare for a reversal. And our breadth really hasn't been great for giving us a direction one other. We did have positive breadth here on Friday, but again, we need to see what type of news comes from across the seas tomorrow to see how that's going to guide the market. As we move on to the educational portion of our video, we've been talking about random outcomes equals consistent results. And basically, pause the video, go ahead and read here, using the book Mark Douglas, Trading in the Zone. And what professional traders know, just like gamblers, is that it's not about a hand-to-hand battle. It's about the game. You may have won the battle, but you haven't won the war. Same thing in trading. You have to get yourself into probabilities, thinking about giving yourself an edge, putting yourself in a position to be successful, but knowing that every trade's not going to work. Cut your losses, let your winners run. Again, as a day trader trading in the futures, you have to understand that yes, there's a 20-point day, 30-point day, but we know that eventually a 100-point day is coming. So you have to go with the probabilities, knowing that I'm just going to keep executing my plan, and eventually the ratio of my positive trades to losing trades is going to make me successful and bring about consistent results. So our offers, as you guys know, we've got the futures day trading room, AccendoTraders.com, tradingroom.html, 10-day trial access for $29. Great room, I'm in there. It's not my room, but Alex is a great leader, and I think that if you want to have consistent results as a futures day trader, that's where you need to be. We also have a great futures broker for you with intraday E-mini margins as low as $300. And if again, using our name with both of these links will get you 20 free contracts and the best advantages. And don't forget about our free day trading ebook that you can get from our blog that has some great information. All these links, come get our podcast, subscribe to that, get it daily. Every Sunday we have a Jumpstart free trading webinar that helps you get prepared for the trading week. You can follow us on Twitter. And again, because we're talking so much about futures, we have a great series coming on our YouTube channel on how to get started trading futures, so check that out. I'll see you guys next time.